Welcome to Partnerships for Profit, the podcast where we bring you inside the world of joint ventures, strategic partnerships, and powerful collaborations. Each episode, you'll dive into conversations with top entrepreneurs, visionaries, and business leaders, unlocking the secrets to building profitable relationships that drive growth and success. Whether you're looking to expand your network, find new referral partners, or scale your business, you're in the right place. Let's get started.
And welcome back to Partnership for Profits. My name is Dean West, and my guest today is Ryan Hughes, founder and CEO of Non-Recourse With a background in executive banking, wealth management, and real estate finance, Ryan helps investors tap into the full potential of their retirement accounts through IRS-compliant non-recourse lending. He is a licensed mortgage expert who helped thousands safely invest in real estate and alternative assets without risking personal liability or tax advantages. He's also a husband of 25 years, father of 6, and a big advocate for financial literacy, family values. Ryan, welcome to the podcast.
Thank you. I appreciate it, Dean.
Absolutely. Let me just start with this because I think this is probably the most important thing. 6 kids.
Well, you know what I like to do, so. Yes, I wanted 12, but hey, 6. We'll have 12 when they're all married. So
that's a good stopping point. How do you feel like having such a big family has probably elevated your attention to finance and legacy?
Yeah, for me, every time I had a kid, I realized, wow, I made more money. Now the money went away, but I made more. So that was motivation myself, but. For me, it's like I had this, responsibility as a father, as a husband, and so money was like for me. I always wanted to make money, but then I started realizing, wow, I need to do this for someone else. Money is good. It's needed, and it's like how do you? And so it became not just for me; it became for them, and so I always say I do this and everything for them. I do it for myself too. I realize you got to love yourself too before you can love anyone else, but. It's a responsibility. It's very, it's rewarding, and they truly appreciate it. Even though sometimes they don't always tell me that I know they appreciate it and they love me and they have a good life, and I want them to have a better life than what I have. So,
yeah, I'm sure that intention of just actually trying to want others to do better comes across in your work. If you had to break it down for a 5-year, actually, let me ask you this first. Could you give me a quick story of the biggest adjustment that you've seen that non-recourse loans have done for somebody, one of the wow, this usually makes people go, maybe I will think about this?
Well, number one, I have a few, but the biggest part is most people, they don't know they can leverage their retirement to purchase a rental property, to scale their assets and their estate. So many people think, oh, I only have 25,000 or 50,000 in my IRA, but that's okay. You can start there and you grow it. And so you use leverage, use the debt to go ahead and to purchase that property. And so we lend and then they're able to buy another one. All of a sudden they look up and they have $10 million in their IRA and assets. They're like, wow, okay, now I could potentially retire. So, I have certain groups that have gone on with a Roth IRA. One gentleman, it was a small Roth IRA, bought a little house and it was a very small loan, but they needed a loan to get it. And they were able to use a non-recourse loan to purchase that. And then that multiplied. It grew, it was in 2000, I think it was 2008, just out of the crisis. And of course, we all know what happened after that. So then now it's up to $5 million, buying larger properties, fourplexes, and then all of a sudden commercial. And it multiplies.
Yeah. What do you think it's like? How do people end up stumbling upon you? If you don't know what you're doing and, someone introduces non-recourse loans, give me if I'm a 5-year-old, here's what I do for you.
Well, you're right. How do they stumble? So most people, they come in through, there's an influencer, there's someone out there, speaking about, using your IRA or 401k, or how do you do, the BRRRR method, or how do you do a sub two? There's different people out there talking at these conferences and on YouTube. Hey, I bought this in my retirement and it's in a Roth. And I'm like, what? And so it's just a matter of first it's someone they heard it somewhere, whether it's on social media, which I haven't been really good at doing, but or on at a they get into a conference or a web, just a different, I don't know, these different summits where they come in for the day and they learn about how to, buy. And then people are like, oh, I don't have any money. Well, what do you got in your retirement? Well, I got, a couple $100,000. Well, did you know you can use that to purchase real estate? And that's where the light bulb goes. Like, oh, I didn't know I could do that. Like, I thought I had to buy stocks and mutual funds only. Well, there's so many people, they don't realize that you can buy alternative assets, whether it's real estate, crypto, whatever it is. Not that, there's so many things you can invest in, private placements, businesses. So it's not just real estate, but it's so valuable that to use that money and, and things you like. People are good at certain things and they understand certain businesses, but this just gives you a way to diversify versus just, putting your money into the stocks and letting it sit there for 30, 40 years. Nothing wrong with it. It just gives you another, option.
Well, in this economy, the fear factor of just staying in the stocks has been a little interesting for people to kind of wiggle around with. But that's actually kind of a good point. With the economy we've seen lately, why do you feel like this is obviously something that is probably a good move going into real estate and rental property?
We've the last couple of years we've been at a high, pretty high with the rates, and the market, there's always a risk to it. But I really believe, we should see some rates come down. I don't have a crystal ball, but we anticipate there are going to be some rates coming down, whether it's the Fed lowering rates and it's always consistent. If you look back at history, anyone that's accumulated wealth, it's in real estate. I mean, no matter what happens, it may go down a little bit, but it's always going to go back up. It always has, and it's an asset that people need places to live. It's something that it's been around forever. It's not going anywhere, and it typically has a better appreciation over year after year versus some of the other. I mean, the market's done well, but it gives you a diversification factor. I mean, I love it. It's always been good to me, so I'm a big fan of it.
Yeah, I think everyone's just waiting for Mr. Powell to give us a little bit extra. When I think what's interesting is, obviously as the housing market's been kind of wacko back and forth, I feel like people are obviously going to be buying less, but they are going to probably rent more the more we get into this kind of shaky ground. They're not going to want to, let go of some of that money. They're going to let it trickle out with some kind of rent thing. So I feel like that kind of leans them in towards this being a great option to kind of hold on to during this time.
Oh, yeah, definitely. The rents are going up. They're not going down. I mean,
yeah.
If you look at the market, and maybe in some areas they are, but for the most part, the rents are always going up, and it's a nice way to get cash flow. Now, of course, with these, you can't take the cash. It's accumulated inside of a tax-free structure or tax-deferred structure, which is massive. Yeah. So it's even more valuable than if you're using your personal funds. This is accumulating inside of retirement, which is it's great making 10, 12, whatever percent on, with regular money, but you got to pay you have to pay tax on that.
Right.
This you don't, not until you take it out, until you retire. And that's on that tax bracket then, which probably will be a little lower than what you are currently, when you're making money. So it's just a way to, it's a great tax structure. I want more people knowing about it.
Yeah. If someone was looking at this versus, going through a traditional bank setup, that kind of loan, what's the big difference that you're really kind of showing people?
So we actually use, bank, credit facilities. So it is an actual bank loan.
Okay.
So there's really no difference. Except when you do a non-recourse, there's no personal liability. So there is a little more down payment. The rate might be a little higher. Maybe it's a point higher than traditional lending. You're going to have a little more fees on the origination just because, it's a little more risky. I mean, it's more risky, but now in reality, I find there's no risk at all because it's inside of a retirement. They're putting more money down. The down payment's higher. So that's really the only difference. Overall, it's really the same structure of a traditional loan you've done. Just, like I said, the rate might be a little higher. The term could be a little shorter versus, everyone's used to a 30-year term. These are typically 20 or 25-year terms, on the mortgage. So that's a little different just on what's available in the market.
Yeah.
You can still find some 30-year terms, but overall it's the same process. You're just not personally liable for it, which is, so, the bank can't come after you personally. So it's protected.
So collateral based, it has a stopping point at least. So if you got in the worst case scenario, the house might go, but they can't come after everything else you have because.
Correct, because it's a retirement. It's protected by ERISA, and it's a big deal with these. It's I don't. Everyone should do it.
Yeah. What would you say the biggest mistake people do? And obviously, let me go back. So when you started recourseloan.com, there was obviously a reason. There was a need because you were dealing with other institutions that you just weren't able to find something that you felt was best for people, or what was it that made you kind of bring this to your table?
Well, so during the previous, I was a bank officer, and we supported a lot of clients that were in the IRA or 401k self-directed space, and they got frustrated because there wasn't out there offering this product. They didn't understand it. Their typical banker had no clue how are you going to lend in an IRA or to a trust, and so they just got they're glazed over their eyes, and so that's why I'm like, all right, I need to put together a product that's nationwide. There's no very limited restrictions. I mean, more of a set guideline. So that's why I really wanted to create this product, because it's such a great way to invest your money, and I want it to be easy. So that's the whole point of it is make it easy. If it's not easy, people aren't going to do it. It's already difficult enough to move your money from one of the big boys into a self-directed IRA, and then now you got to go buy real estate. It's already complicated enough. So
Yeah.
I'm trying to remove that barrier of entry so they can keep growing.
What is give me like the streamline of how you guys handle it with the site versus kind of like, the original, if I'm going to go through the bank, I've got to do all this other stuff and bring everything, there's a lot of work that obviously an individual would have to go through versus coming to you guys.
I mean, there's still some work in there, but I try to partner with credit, with the actual title companies. We have the third party appraisals, but try to work with people that the title attorneys. They understand that this is an IRA loan. It's not, you're not personally signing. You're not personally signing for it. It's you may sign as a signer for the IRA, but you're not putting the loan inside of your personal name. So you want to make sure that you're working with people that understand it. And, so to streamline that, I have, the online application, and where it's, I try to help with even finding properties potentially for them that qualify, because that's usually the hardest part, is locating an asset that works. And, it's hard, and when you come over from being in the IT world and now you're buying real estate, like, it's really hard to find that, what works and what cash flows and the qualifications. So I try to help investors not only do the loan, but also find an asset that actually is producing and it's a good property to purchase.
Yeah. So do you work with realtors pretty often? Do you kind of keep a few kind of close to the team, or?
I mean, not so much. I mean, I do work with realtors, but I mean, also I work with small builders. Typically, they're able to. The home actually comes in lower because the builder knows it's being purchased inside of an IRA. So a lot of times you'll get it at a little bit of a discount if you're able to commit before that home's built. And then also it's a new home, so you don't have to worry about anything breaking. It's there's no issue with plumbing, or I mean there may be, but it's a new house, so that way it's like, oh great, it's hands off. You got a tenant in there. People like new, right? So it's easier to rent it. And a lot of times these builders have clients that are interested in already moving in before the home's even built. So they may actually have a tenant that wants to move in, and you don't have to do anything for it. So because the builder just want to build homes. They don't really want to deal with anything else. So that's I'm finding that's it's a great market. And there's certain builders across the country that are niche builders that I'm starting to really build some relationships with and try to help not just the builders, but also the IRA holders and to find good assets that are cash flowing. And so, yeah.
That's pretty cool. I love kind of how that flows. What's interesting is the more you keep doing this, the more you're kind of putting pieces together for people to just literally, if you can get approved, everything else is kind of step in step. When you were doing this, were you doing this on your own before you kind of got into this and creating the website and everything?
Oh yeah. So, I mean, I had, my own, I would buy into properties. So I'd buy in and invest. I would do with other IRA holders, or I'd even do it with some, private lenders I would put money in as well through my solo 401k, and then, just, purchasing them. But I mean, on a small, I was always so busy with, being running the bank. It was a little difficult to obviously capitalize on opportunities. So now it's funny. My kids are always like, Dad, why aren't you retired? You know so much. Why are you still working? I'm like, well, it's funny. You work your tail off, and then you're like, wow, why didn't I do that? So, but we're working on it, and it's something that we're trying to be more active in. But I definitely invest in I have a solo 401k that I invest into, assets and businesses. So yes.
What would you give like a kind of a timeline? So say someone wanted to start this now, where do you see them in 12 months?
It's as fast as they want to go. I mean, I think you still have to hustle, right? It's still, it's not going to just come to you. I think it's great to get around a good network of, people that are doing it. There's a lot of different passive investors. There's a lot of networks out there that do this type of stuff. Just finding a good group of, people that have done it, and then you can find the assets. I mean, I've seen people go from, 100,000 to, 500,000 in value in a year. I mean, it is a process. I won't say it's going to happen overnight. Yeah. But depending on what you have and how you structure things. I mean, I see all types of different structuring for this type of, these type of investments. Some people take a partner on, and they're partnered with builders, or they're partnered with other investors. So they have all the, and they're just going in there as the equity person. So there's all types of ways to structure this, these type of loans.
That's really interesting. Yeah, I never thought about that way. You can pretty much just put your team together and, 4 or 5 of your best friends that all kind of want to do this thing together.
Yeah, you're like kind of the lead. So like you can have someone that's the lead. Maybe you don't have as much money as your friends, or but you're out there hustling, finding the property. Yeah, and then all of a sudden yours is growing alongside of having another. If you have another, it obviously helps to have more money and available to go out and go and negotiate. And if you can pay cash for a property, and then some clients will do that, they'll partner with someone else. They'll find it, they'll pay cash for it. Then I'll come in behind the fact and do a refinance on it and cash it out. So they go to another one. And the reason that's valuable is they're able to offer cash and close next week. So they can get maybe a 20, 30, 40, a pretty substantial discount on the property. So
what do you think, like minimum wise? Like, so, say they wanted to try to start it on their own and they didn't have too many other friends that were in that range with them. What would you feel like kind of you're looking at minimum of this to kind of get qualified to be able to even do this?
I mean, the problem is you really need 100,000. I mean, and which is tough. I mean, a lot of people, they don't have that in their, when they're starting out. So you probably do need to, go with a couple other, IRA holders. And the reason I say 100,000 is, you need 30% down, typically. So you're talking, you might be able to get away with 50 to 7, but I mean, typically to find a property out there, if it's a $200,000 property, you're putting down 60,000, and then closing costs, and then you want some reserves. You kind of need the 100, just because you want to make sure you have the reserves inside your IRA, because you can't use personal funds to do repairs. And that's why I say it's good. If you can find a new property or new construction, you're better off.
Yeah. Because then it's going to rent quicker. It's already pretty. You don't have to go like edit photos to make it look cute.
Yeah, exactly. And, but people buy notes. I mean, there's all kinds of things you can buy to increase your value of your retirement, and then maybe start there. You can buy stuff for 10,000, 25,000, and just keep building it up to where you can start buying the actual hard assets.
Okay, and I'm going to assume your focus would be obviously newer homes, or you're going to put yourself in a worse off position if you're not buying something that's already at straight up, let me move into the rental phase versus, okay, we need some work done, blah, blah, blah.
I mean, yes and no. I mean, I have a lot of clients that do, they'll do cosmetic work. They'll, some are total gut jobs. I mean, there's one I'm literally working on right now. It's 150 to 200,000 in rehab, but they're getting the house at, 550,000.
True.
They're putting 150, 200 into the property, and it should be about a 950 to $1 million after rehab value. So, that's it's not a bad, it's cash flowing well, that, with the rent. So it's it just depends. I mean,
Yeah.
I've done 19, properties that are 1940 that have been rehabbed, in some of the Northeast. It just really it's all over the map. Some people want new, some people like to get into something that needs a little work. And, the ugly, some that say the ugliest girl in the room is the best one to have,
I'm gonna leave that alone. Not even gonna go there. So, and this is obviously nationwide, so people can reach out to you from wherever they're at, correct?
Oh yes, I got clients, and some of these clients are even international. I mean, they're U.S. based citizens,
Yeah.
but they're living abroad, and they want to invest with their retirement and purchase assets. So that happens as well. But no, yeah, we lend nationwide for the actual assets itself.
Right. What do you feel like? So, obviously, like I said, most people have never heard of this or how to even go about doing this unless you have been, looking for some way to enhance your legacy or really dive in and use this IRA you've got sitting over here. Do you think there's a reason that big banks don't kind of like push people or lean this into, I don't feel like this is something you call your financial advisor and you're like, hey, you ever think about?
Well, it's funny you ask that. I think it's a disservice, honestly. I mean, and it's been around since 1974. This is not new.
Okay.
It's just there's a lot of money in financial advice. There's a lot of money out there. They make a lot of money on idle cash. If it's just sitting there, they're making money.
True.
So I mean, part of it is maybe they don't, and then they don't know how to, like. There's been some questions of how do we is it AUM and assets under management, but in reality if you're a financial advisor, you should listen. But some of the big guys, they don't allow it. Alternative assets inside of a retirement. You're starting to see some of the groups move over with some of the crypto, and obviously that's a big topic. So now they're starting to have, oh yeah, you can buy this this or this, because they're trying to be a little conservative, which I understand. You want to protect your client, but when it comes to real estate, I mean, there's nothing more, really, there's really nothing more I believe secure than real estate. Now, everyone has their own opinion on that, but it's something that it just, unfortunately, they don't talk about it. Because there's not enough money in it, or they just don't understand it from the financial advisors. And I mean, so many people, they don't even know, like, forget what we're talking about. They buying a house inside your IRA or 401k. They're like, what? Like, they don't even, like, their money's been sitting in the market for for all their life, and you're saying now I can go I can go invest in a business. I can we all know the Peter Thiel story, right? Of PayPal. I mean, the Roth $2,000 Roth turned into 5 billion or whatever. So it's out there. People are, and that's how people do it. They move some money from their traditional stocks and bonds. I'm not saying move all of it. I have money in the stock market. I have money in crypto, a stock market, in real estate. I mean, businesses, and you lose money too. I've lost. I mean, that happens.
Yeah.
But I love it. So
willing to risk it all. Maybe you'll turn it into a Palantir as well.
Yeah, there's a lot of money out there in the market. I mean, there's 34 trillion in the market, on the market, and I think like 17 trillion of it's IRAs. So and maybe a trillion of it's in self-directed. So there's quite a bit. I don't know. Don't quote me on that. On those numbers exactly, but it moves around a little bit. But there's more and more people knowing about it, and so I think I would love to see it to be more mainstream, or just more people, because especially some of the younger generation I see with my kids is they're all for it. Like, I'm like, they're like, Dad, how do I get, so they have they have the Roth, they have the LLC, and they're doing businesses. There's more and more of them, opening up LLC businesses with with all the NIL stuff, with the influencers, all this money, the younger generation, and they don't necessarily want to put in boring stocks.
Get me an OnlyFans and put it in the right place. And that's interesting, but I think obviously we have older generations. They're while everyone's somewhat computer savvy now, the ability that the younger people have to be able to just jump on, look up and find anything. As soon as you kind of just dabble into finance, or, you stock popped over to a day trading thing, you're going to start having all kinds of different people pitching you on ways to spend your money. That's the algorithm will definitely find a place for you to put it. But I think that's what's cool about with the younger crew is I feel like we're getting more interested in financial literacy because, again, unless you had an uncle that knew what they were doing, I mean, like the stock market was like its own mystical vision. You know what I mean? Because you
Yes.
weren't on, if you didn't have someone that did it, you couldn't learn it. What would that'd be a good thing? What do you think a good place for someone that is kind of new to understanding all of this, that, someone in their, early 20s, where would you lead them to kind of get this kind of thing started?
I mean, there's some great resources out there. I mean, definitely you can use, YouTube's, I kid around. There's a ton of YouTube, information about self-directed retirement accounts. I mean, that's one way to just understand it a little bit more. And then, shame on me, I'm working on actual, like, where I have like an ebook and some additional information about lending, more focused on lending. But you got to start with the retirement first. Like, how do I do it? Can I do a solo 401k? Is it an IRA? Because there's different rules depending if it's an IRA purchasing the real estate versus a 401k. Don't ask me why, but there is. And so you're better off doing it. If you can do a solo K and purchase real estate, you avoid there's some tax implications that you would have on IRAs that you wouldn't have. So, that's important. But then that gets into a whole different topic.
Yeah.
I mean, there's a great book. It's a self-directed IRA handbook. I highly recommend it. That's what I got into 7 years ago. I read that book. I had no clue what a solo 401k was. I mean, or a self-directed IRA. I had no idea.
And what's the name of the book again?
It's called a self-directed IRA handbook.
Okay.
And it's by Matt Sorensen. That's the kind of I shouldn't say like, but the Bible, right, of this space. Like he's like the one that wrote it and just put it in. And there's other books out there, but I think that's a great book to start with.
Okay.
I've given that to all my kids, to have them read it, and it really dives into everything. And that's where you start. Like, just learn a little bit about it, or just understand it, and then it's like, okay, do you qualify, for this type of, can you do this? And then, what do you want to purchase? Do you want to buy into real estate? Do you want to buy into, commercial or residential? What are you good at? What do you understand? Then reach out to, your network and mentors and, realtors and, loan officers and, people that understand the market, and then just, really just start, find a great mentor or a couple of them.
Yeah. That might be your next link on the website, a place to come mentor with Ryan.
There you go.
So I'll wrap it up here, but let me ask you this: in 10 years, when someone talks about your business, what do you want them to say?
He changed the world. That's
right.
I mean, I want like someone to look back. I'm always wondering, is anyone going to be at my funeral? Like, is anyone going to do that? And it's like, unfortunately, I'm getting a little older, so I'm starting to see more funerals, and it's that's important. I want my kids to look back and, my dad did that. He really made a change, and that's important to me. So I really want that legacy, and that this made an impact. Not just with the space, but business owners and the young generation. It's needed, and I hope I can help change it. And that's all I can ask.
The first thing that popped in my head was like, oh, so you did you wanted 12, so you had more people at your funeral.
So that's why I had more kids. So at least I'll have my kids there, hopefully. I already got 2 grandkids also. So I mean, we're already, we're already growing. So I got another one getting married here in August. So it's going to be, we'll just keep on, we'll see what happens.
Well, congratulations.
Yeah, thank you.
Outside of non-recourseloans.com, what non-recourseloan.com, correct?
Yes.
Yeah. Outside of that, any other socials? Say again.
So I have a couple. non-recourseloan.com. I know it's nothing fancy, and I probably should have made it a cool name, but
no, that's perfectly specific.
you know what it is. I mean,
yeah.
So I do have some other social. I haven't been good with that, but I do have, I do on Facebook, the non-recourse loans on Facebook, and I have the Instagram and TikTok. So they're out there. I'm trying to be more active on that. And we do have Bankroll and Bosses. And that's another social out there. So, if we can't get a loan done, no one can. That's our catchphrase. So just a little fun, I do some stuff in some other areas, but yeah, that's about it.
All right. Well, outside of, creating more kids for the funeral and building all the legacy, thank you so much for coming to hang out with me today, Ryan. Is there anything else you want to kind of add of like just a final note?
No, I really appreciate you having me on. This is, I want to do more of this kind of stuff. And I know so hopefully I'll get some podcasts going. I know that's a big thing we talked about, just getting information out and helping people learn. And to me, that's the most important part. I don't even care if I get the loan. I just want to try and help educate and just to help it grow. It's a great market, a great industry. And I just want more people to know about it.
I like it. Yeah, I feel like that's where you're headed with everything. You might end up having a little mentor group faster than you think.
That's the goal. I really do want to change the business owners and empower financial freedom. So that's the goal. So.
All right. Well, thanks again, man, and hopefully we'll see you on another one.
Yeah, great. Thanks for having me.
All right. Have a good day.
All right, you too.
Thanks, everyone.
Thanks for joining us on this episode of Partnerships for Profit. We hope you've gained valuable insights on how to form profitable partnerships and take your business to the next level. Be sure to subscribe and leave us a review wherever you listen to podcasts so you never miss an episode. Got a partnership story to share or someone you'd like to see featured on the show? Reach out to us. Until next time, keep building those partnerships for profit.